Sapura Energy strongly refutes allegations that it was involved in any form of corruption during its business dealings in Brazil or indeed anywhere else in the world. It issued a statement to the bourse today in response to investigations in Brazil involving Sapura Energy and offshore oil rig firm Seadrill. It was reported that Brazilian and Dutch police executed dozens of search warrants on Wednesday as part of a corruption probe into Seadrill and Sapura Energy, as Brazil's infamous car wash corruption investigation eyes an increasing number of international firms. The prosecutors described the operation as an attempt to deepen ongoing probes into 3 contracts worth $2.7 billion signed between Sapura Energy Seadrill JV and state-run oil firm Petrobras in 2011, Reuters reports. Today, Sapura Energy said in an early investigation by Brazilian authorities in 2016 and 2017, the company was cleared of all allegations of bribery or corruption. Ecoworld Development Group saw its third quarter FY20 net profit shrink by nearly 73% to 13.8 million as COVID-19 related movement restrictions disrupted business. It also made a decision to write down inventories by 65 million, which resulted in a lower gross profit margin of 11.4% for the quarter. Revenue was down 8% to 477.9 million. Going forward, it says the earnings outlook for FY20 will be substantially lower than the previous financial year. However, the developer said future revenue from local projects alone remains very high at 3.36 billion ringgit. It expects the upcoming launch of its Duduk series of vertical townships in the Klang Valley, the Eco Botanic 2 township in Iskandar, Malaysia, and other products to cater to the group's fast-growing M40 customer base to underpin prospects beyond FY 2020. Meanwhile, Ecoworld International says its third quarter earnings contracted by 35% to 37.6 million. It attributed this to the lower share of results in joint ventures due to higher number of units sold being handed over to customers in the previous financial year. Top line, however, made a massive jump from 224,000 to 615.4 million ringgit, mainly due to revenue recognition of West Village, its maiden project in Australia. The group said it saw sustained interest in its London projects and expects the sales momentum to continue through the fourth quarter. It is also pursuing a sizable build-to-rent deal in the UK and hopes to close the deal in the near future. Mr. DIY Group Malaysia will issue 941.49 million new and existing ordinary shares for its upcoming IPO as it resumes its journey to Bursa Malaysia's main market. Of that, 470.75 million will go to MITI-approved Bumiputra investors, 309.21 million to institutional and selected investors, 36 million to Mr. DIY directors and employees, and finally 125.53 million new ordinary shares to the public. CEO Adrian Ong says that the event is a major milestone for the hardware retailer, even as it faces the many challenges brought on by COVID-19. He adds that tapping into the capital markets will help to accelerate its growth plans, further entrenching its position as Malaysia's largest home improvement retailer. Previous reports have said that the listing could take place as soon as the fourth quarter after having been delayed twice, possibly raising as much as 2.1 billion ringgit. Axiata Group has received the nod to list its subsidiary in Bangladesh. In a BOS filing, Axiata said the Bangladesh Securities and Exchange Commission had approved the proposed IPO and listing of Robi Axiata. In February this year, Axiata said it was looking to raise 255.2 million ringgit with a proposed listing of its 68.69% owned subsidiary Robi on the Dhaka Stock Exchange and the Chittagong Stock Exchange in Bangladesh. Post-listing, Axiata's stake in Robi would be diluted by 6.87%, but it would remain the telco's controlling shareholder. The proceeds will be mainly utilized for network expansion. Robi is the second largest mobile network operator in Bangladesh by subscribers, with 49 million as of end December 2019. Bokong Holdings saw its fourth quarter net profit drop 24.2% to 8.01 million due to COVID-19 and the implementation of the movement control order. Top line for the quarter dropped 22.7% to 179.3 million ringgit. It declared a first and final single-tier dividend of 1.2 cent per share. The MCO hurt Bokong's retail segment, which is its main revenue driver. However, this was balanced out by the uptrend in gold prices and its cost control initiatives. For FY20, net profit dropped slightly to 24.4 million from 25.3 million previously, while revenue dropped by 25% to 748 million from just over a billion last year. On its prospects, Bokong says it is continuously monitoring the impact of the current uncertainties.